The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 23rd terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is something that we must master each and every day. So let's begin with a few empowering beliefs. The first one, brought to us by, I call her Anne Rand, but I think it's Ayn Rand out there, and it goes like this. The question isn't who is going to let me, it's who is going to stop me. Oh, I like that quote. The question is not who is going to let me, but it's who is going to stop me. I say, don't let anybody stop you, folks. How about the next quote here? You know, you got Apple out with earnings after the bell today. A little bit of pressure here in the NDX 100, not really being brought to us by Apple, but instead by Broadcom. But let's go take a look at one of Steve Jobs' quotes out here. He says, the only way to do great work is to love what you do. Oh, I sure hope you love what you do. I know that I do, and I love being here with you. Let's take a look at two more. Let's go take a look at two more empowering beliefs out here. Do what you can where you are with what you have. Guess what? That was brought to us by Teddy Roosevelt out here. And the last one, Grandma Moses, she said, life is what we make it. Always has been, always will be. You know, folks, success leaves clues out there. And that's what we can learn from these folks. And that's why I also want you to understand patterns in the marketplace and the stock charts that we look at, candlestick charting. It's why I want you to understand how to read the message of the market. So let's begin by reading the message of the markets right now. Let's start off by taking a look at the NDX 100. We've got the Dow is up 32. S&P just turned slightly positive, down a buck right now. Composite off 7 points. Russell 2000 slightly positive, up 33. Google's down $2. Apple's off about 4. Actually leading the charge percentage-wise to the downside inside the NDX is Broadcom, ticker symbol BRCM. We'll take a look at it. But first, let's start off by looking at the NDX 100. Again, Apple out with earnings after the bell, so it should be another wild ride here at 430 or 431, right around that time frame. So far, the NDX, it is trading back below the May 22nd high. Says, okay, false break to the top side. However, what it's still also doing, it has not broken support. And there's no question that at least your first level of support is the July 11th low. And that is a level of 30.30. Has not been tested, but that is a gap up. What the NDX has done here, it has worked off an overbought condition because it gapped up on July 11th, moved a little bit higher here, but the move down as a result of the Google release of numbers on July 19th, that just simply immediately worked off an overbought condition. And we've seen the market, in essence, move sideways the last couple of days out here. And what is that suggesting? Well, geez, you're coming down into support. You've worked off an overbought condition. It's not telling you a darn thing. I wish it were, but it's not really telling you a darn thing. We'll go take a look at volume, and we'll take a look at some of the underlying components out here. But right now, until the NDX, we're trading below 30.30, or quite frankly, it would have to get all the way down into the top of the gap, which is your July 10th area. Then it would be giving us a big message inside the markets. But what we do know thus far is that we did have a gap down. So just as we're taking a look at support from the gap up on July 11th, we also have some resistance here that really was established at yesterday's high at 3061.55. So that is on the NDX. Let's go check out and see what Apple itself is doing, because it still is the largest weighting within inside the structure of the NDX 100. As soon as I find my tab here, there we go. So let's go see what Apple is doing, see if there's any message that Apple is giving to us. Apple here had made an A to B equals CD down. The A point on this was your May 7th high, 465.75. Your B point was a low of May 16th out at 418. Makes about looks like a 0.786 retracement, just slightly above that level on May 31st. Makes the 1 to 1 1.272 A to B equals CD down just a little bit below that level on June 28th out there. Reverses higher. Where does it get back up to? Almost to the 0.618 move off of that high. The high again that we're taking a look at is May 7th, down to the low coming in on June 28th out there. The 0.618 retracement would have been 436.38, actually gets up to 434.87. Close enough for me in my work. And then as it begins its move down, volume starts to pick up a bit. 9.5 million shares on July 19th. Yesterday, 7.4 million shares. Not a lot of conviction behind yesterday's move. Of course, really an inside day, so it didn't release any information to you candle-wise anyways. This morning, though, trading lower. 2 million shares to the downside in less than, about 45 minutes of trading, we'll call it. So you do have some volume that is pushing into lows. We'll have to go take a look at an intraday chart out here. Of course, what it's really moving into, it's moving into a day that had July 9th, that had 12 million shares. More importantly, 17 million shares on July 2nd. 16.7 million shares to be exact. That's what it's trading towards. The top of that's 421.63, and let's see, so far the low this morning has been 421.61, so it's hit that level, and we'll just have to see if the volume is able to continue. Let's go to let's do it on a 10-minute chart here. It may take a moment for this to actually load. Let me just do this. Oh, I didn't mean to do that. Whatever I just did there, that was a mistake. Delete all. I think I must have gone to a tick chart or something here. Let's see here. There we go. Okay. So now we've got the 10-minute chart out inside Apple. Just want to see if I can see anything of significance out here. Let's put the old Pesavento pattern tool on here. Take a look at any retracements or expansions. So what we can see here right now is the expansion, a 1.272 expansion on a 10-minute chart going back to the July 16th low out there. And let's see, retracement-wise, coming off of this low down here from 9:40 in the morning on July 9th. Let's see, what have we done here? You've gotten close to the 0.618 retracement. 419.74 would have been the number out there, but those are the only two retracement numbers that really jump out at me. A little bit of a butterfly pattern here on a 10-minute chart coming off of the lows here from July 19th. Let's take a look. Let me get rid of both of those tools here. Let's take a look at any volume issues that we've got here inside the equity. So you do have this big volume bar right now that it's trading into, which will take you back into the open session on July 3rd, 1.5 million shares. So it's going into that. We'll see if it can find some support. The top of that was 422.98. The bottom was 418.82 out there. Now, let's go take a look at Broadcom. We'll go take a look at the Qs as well, but let's take a look at Broadcom because percentage-wise, that's what's putting the biggest hurt into the NDX. BRCM is the ticker symbol. That's trading off about almost 5% here this morning. So let's go see what is behind this move, see what kind of volume we've got out here. Let's clean up this chart. Let's just start from a fresh chart out here. I'll get rid of everything that's on it. We'll just simply reset it and see what we can come up with here. So Broadcom right now is taking on it's coming right after here. So it's coming after this high volume low out here. Very clear as to what it is doing. And we're looking at July 17th. If you're listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can get the archive of this show on Channel 9, or you can get the live stream to your smart device, pad, what have you, by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a little button, little square with 3 little digital devices. Click on that. The show will stream live to you. And what you'll see here, if you're looking at us live, you're going to see a high volume low. It has been tested. And it's been tested, been a successful test, so we'll see if this becomes another successful test of that area. Volume will matter. Volume on July 17th was 26 million shares. The top of that candle, 30.15. The very first test of it, or the only test of it so far, was on November 16th as the market was moving lower. But it was a test of 8.8 million shares going against, I didn't mean to do that here. That was 8.8 million shares going against 26 million shares. Not enough to bust it down. Right now, you've also got on that 8.8 million day. Let's go see what, because are we trading into it? Not even trading into it here just yet, but you do have volume. You've got 8 million shares here. Now, it's not made it to the swing point. That swing point that I was looking at, again, that July 17th high volume low out there, that price is 30.15. So it's coming down with volume. What does that tell us? tells us really wants to go seek and touch that level, wants to at least do a touch and go. We can see that it's also gotten into the oversold territory out here, but still looks like what Broadcom wants to do is move down somewhere between 28.60, that's the low of that session, to 30.15, and volume will be a big determinant about what it will do out here. So that is on the Broadcom. Let's take a look at Google as well. See what Google is doing, because Google is what began cracking the NDX 100, but then we saw it actually close the gap, and let's take it in yesterday, formed a little doji candle. Now, doji candles, that's today's candle. I take that back. Yesterday here, if we take a look, so we had Google gap down from July 18th. The low of July 18th was 903.19. The high of the gap down was 899.49. But really, as far as bullish or bearish candles, it was pushing down with volume, 4.2 million shares, and it was moving in towards a strong area of support, which is the hammer candle from June 6th. It was pushing down in there with volume, never got down to test that area. Now, as we take a look at the bounce out here, yesterday was an extremely light bounce. That bounce here was 2.9 million shares, even going into the breakout session that had 3.6 million shares on July 18th. Today, so far, we've got really kind of a draw, a doji candle out here, so it doesn't have any meaning at the moment. When you do come into a resistance area with a doji out there, what it says, actually there was no gap. I just refreshed my chart. Let me make sure here. I don't want to give you any bad info. 903.19, and the high was 90. There was a slight gap out there in that July 19th, July 19th session out here. Now, a doji candle has more meaning to me when it comes into a resistance area. And kind of hard to call this a resistance area here right now because it's in the candle. I would have to say the top of July 18th is most likely going to be tested, but really the actual swing point high is what we should be paying attention to. That is, looks like July 15th, a round number high. So on a Basil Chapman's round number high, July 15th out there, 928 even Steve, and the low of that candle, 916.36, is likely where Google will actually move up to before it releases any kind of information to us. Volume there, pretty light on July 15th, 1.9 million shares. So far in trading today, 545,000 shares. So Google not giving us a whole heck of a lot of information. Well, it gives us the information that it actually wants to move a bit higher out there. As long as we're in on this area of the charts, let's take a look in on IBM, just simply because of the weighting inside the Dow. The Dow leader up here right now, but what's putting the juice into the Dow is DuPont. You got DuPont, United Tech, HP, Alcoa, Walt Disney World, IBM, Home Depot, JP Morgan. Taking away from the Dow is Travelers, Cisco, General Electric, McDonald's. General Electric, we're going to go take a look at that. I don't know that it gapped down this morning, but let's go. We'll take a look at that. In fact, I'll take a look at that during the break, and if it makes sense, then I'll put it up on the screen. But right now, you got IBM trading out at 195.22 out here. Our call number is 877-927-6648. Give us a call, folks. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, the Dow is up 38 points. The S&P just slightly red, down 60 pennies. NASDAQ off $7. Russell 2000 up 84 cents. NASDAQ 100 down about 10 points. But the New York Stock Exchange is still green here, slightly green, up 14 points. Netted bats issues up 505. So the overall breadth of the market still not too bad. Let's check in on the New York Stock Exchange. New York Stock Exchange here is trying to test the May 22nd high out here. That level is 96.95.46. You're trading at 96.64 right now. No reversal signal here yet inside the New York Stock Exchange. I think that we're just taking a look here before the break, really looking at the NDX 100 because, you like to look at weakness, and that has been the weak link out here lately. Your next, the New York Stock Exchange has not been a weak link at all. I mean, it has had strong market breadth. Each day we take a look at the market as we've seen it try to push down a bit early in the day, and we see the New York Stock Exchange being the leader in the clubhouse out here. In fact, the Dow is up by 0.2%, so this morning it is leading out here. And so you want to really be paying attention to the New York Stock Exchange. Doesn't mean that things can't change. What you're looking at is moment by moment inside the market, and certainly it's really the end of day that it's all going to matter. In order for the market to have a real reversal here today, New York Stock Exchange would be one of the places to look. And what it could do today, that's if the market decides to begin a push down here in the summertime. If you see a close below Well, let's look at it like this. The market is somewhat extended. If we take a look, now the NDX wasn't because it has sold off, so it had worked off that overbought condition. But the other markets, the SPY, or the S&P, the Dow, the Russell 2000, New York Stock Exchange, they are in the overbought condition. Now, today, if there were a spike below 96.21.97, that means 96.21.96 and below, that would set up the potential for a key reversal session. And all that the New York Stock Exchange would have to do would have to close in the red, close in the opposite direction of where price was moving into. Now, the reason that I bring that up is because it's trading into a key reversal session. May 22nd was a key reversal session on the daily. It was a key reversal session on the weekly out here. And the wider swath of the market, the wider breadth of the market is really what it is that we want to be paying attention to. So today, if in fact that were to happen, get below 96.21.97, and no matter where it closes, as long as it closes red, you would then get a key reversal session. Likewise, if it closes below 96.2601, you'd have a bearish engulfing and potentially a key reversal session, just like it was on May 21st out here. But right now, it's long and strong inside the New York Stock Exchange because the market breadth is up. You still have a positive day. In fact, you would need net declining issues today of, what is that number? I don't have it memorized, but I can always look it up here. I believe it's like 2199. 21. So you need 2,200 issues, net declining issues, in order for the bears to actually take control of the market. But let's go back. Let's take a look at some of the other indexes out here, because from strength, we would be able to obtain information about what the market is doing. And by strength, that means we would take a look at what? At the Russell 2000. In fact, we can take a look at the Russell 2000, 1000, and 3000. Why don't we do that? Because we don't do that often. In the case here of the Russell 2000, it's traveling out at 1053.51. It would form a bearish engulfing and a key reversal session as well, with a close below 1049.24 today. So that would be that would be a big move. That would be a 25-point move or so, 28-point move or so inside the Russell 2000. So it ain't there yet, not really, even though the candle's red. That's not a bearish candle, not a bearish-looking candle inside the Russell 2000. So we're going to have to be paying attention to the strength inside the market as well. Let's take a look here at the Russell 1000. I'm sorry, the Russell 3000. RUA is the actual ticker symbol. Russell 3000, that's up over its May 22nd high, not like the catapulted mark of the Russell 2000 out there, but still above the May 22nd high. This would have a key reversal session here if this were to close below, or intraday get below 1008.40 and close in the red. So that's a very doable thing for the Russell 3000 out here. So a little bit larger breadth of the market of what's going on inside the Russell index. So we want to pay attention to that, because that is a very doable thing here today. Let's go check out the actual Russell 1000. I know I've got that, the RUI as the index on my screen. And on the Russell 1000, you can see up above the May 22nd area. Today, for this to be a key reversal session, that would be, you could do it in a heartbeat. Just means that inter-session would need to get below 938.20 out there. It's at 940.03. So that becomes very easy, and that's the Russell 1000. So there's a number of things. We'll come back. We'll continue to take a look at those markets out here because, you know, I am expecting a top, but I'm waiting for the market to tell me what it's going to do. 877-927-6648. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 19 points right now. S&P down 2.5. NASDAQ off 14. Russell 2000 down 71 cents. And the New York Stock Exchange still just slightly positive, up 5 points. Now, let's dissect and bisect this market here, as Tom likes to say. And let's start off. We're going to take a look at the 120-minute chart here of the S&P futures contract. We've got that nice rising price channel that it has clearly established coming off of the lows back here on June 24th. Now, the session that we're using for the price channel is the actual open at 1:30 in the afternoon on June 24th. My next set of touch points are the open candles. Really, it's a doji candle out here from 5:30 in the morning on July 3rd. The open on at the 7:30 session on July 3rd as well. And that really sets up our bottom of the price channel out here. You can see the top of the, we're not going to spend much time on the top of the price channel, but you can see that right now, one of the other spots that we're going to be paying attention to is what's price doing as it gets down to the bottom of that price channel. You say, what's that number, Steve? I'd have to give you an estimate. It's probably about 1685 or so. You're at 1688 and a quarter. So, maybe it'll happen during the next 25 minutes or so. But you can, if you've got a 120-minute chart, I would suggest putting this price channel on your screen, because this level has been pierced, but it has not broken. And so that's going to be important to watch. Now, as we go down into the 30-minute chart here, just to see what's going on inside a 30-minute chart out here, 30-minute chart, as you can see, is getting down towards that oversold condition. That's at the bottom, about the 30 level of that relative strength indicator. Right now, it's at 32.11. Each time down here, we have seen a bounce, sometimes a significant bounce in the marketplace. So it's now moving into an area where we would expect. So as we took a look at the 120-minute chart, we see that coming into support. As we take a look at a 30-minute chart, it's coming into an area where you would expect to see some type of bounce, and that's why, I don't mean at this very moment here, but that's why we want to be paying attention to these, because if these things don't occur, that's giving us great pieces of information out here. Or if it does in fact get a bounce, we want to pay attention to see, is it just a slight retracement setting up maybe an A to B equals CD down. So that's what's going on those two intra-period charts. Now what I'm going to do is I'm going to switch over to the actual index itself. So we'll switch over to the S&P 500 index, because what this is easily going to, or should be able to do today, is to create a key. It's already a bearish engulfing candle for it to close like this, but that was a simple objective. That was a simple outcome because of the what looks like a high wave type candle from yesterday, very close to a doji style candle inside the marketplace. In such a small body candle for the following session to actually engulf it or wrap it, not a big deal out there. However, it'd be more of a big deal to me, similar to what we looked at inside the New York Stock Exchange, where we had that May 22nd key reversal session out here. All that the S&P 500 needs to do today is intra-session is get below 1690.67 and finish in the red. That would be a key reversal session. However, why don't we say, you know what, S&P, if you're really going to prove yourself to us, which we'd like you to do, and that means that you're going to go back down now and test the June 24th lows. Let's give it the bigger test. What it really needs to do today is get back inside the lower part of the range. That means it closed back below May 22nd, and that number is 1687.18. So you can write this down on a pad of paper. You get it closed below 1687.18, and you will have had a key reversal session, which are important to be paying attention to, a bearish engulfing, and you will have gotten back inside the lower part of the range inside the S&P 500. And that, folks, would be a good place to go ahead and start to nibble at taking a short position inside the market. You get some follow-through, then you can add to your position out there. And if it doesn't work, well, then it doesn't work. But that would be the trade setup inside the S&P 500. If this was the low that we see today, no key reversal session, don't get below 1687.18, I would say be patient and wait for some additional confirmation. Why would I say that? Well, if you just simply take a look at the retracement, if there is a reversal that were to take place from the low of June 24th to the high of today, the normal move, which would be down to the 0.618 level, is 1613. You're at 1692 right now. Even at 1687, that becomes, which is the May 22nd high out there, that becomes some pretty significant bread. And the more likely outcome, it's not a retracement to the 0.618 area. It's a retracement all the way down into the June 24th swing point low out there. But the 1613, that certainly would be a game inside the marketplace, and that's inside the S&P 500. Now, if we go over and take a look at the SPY, just to try to put it in line with what we would be looking at inside the SPY out here, it would create a key reversal session just simply by intra-session here getting below 169.01. You're 169.17 right now, so it looks like that's easy to do. And a close below 169.07 would get you back into the lower part of the range out here. So that's why those are the numbers set up right there, and that's what we'll be paying attention to. Now, let's go take a look. As long as we're in this area here, let's go take a look at the IWM, because this is going to be another, just like we looked at the Russell. So let's go ahead and complete that pattern off inside the IWM today. Yesterday was a doji candle inside the IWM. Doji candle, two dojis, not back-to-back, but you had one here as the 1.618 butterfly was completed on July 18th. Then a sideways move here on Friday. Yesterday was another doji that really continuing on with the 1.618 butterfly. So today, if this in fact closes below, gets below, I should say first, gets below 104.13, that means 104.12 or below, and it finishes in the red, you'd have a key reversal session. And the key here, you really need three things, folks. You need to, number one, be in an extended condition. Now, I think one of the better tools out there to determine whether you're in an extended condition or not is the relative strength, relative weakness indicator out here. Clearly it is. That's the middle section of the chart that you're looking at on my screen. So clearly it is an extended condition. It's overbought. The RSI being, at the 70 level or above. Look, 69 would work too. 68 would work too. So we've got that condition. Number two, you would need a intraday, a price above and below the prior candle. Well, that has not occurred just yet. And then third and finally, you need to close in the opposite direction of where price was coming from. So we'll look for that. We want to get those types of clues inside the marketplace. Let's go take a look at the Dow Diamonds. What would the Dow Diamonds need to do? They would truly need to reverse. Let's take a look at the DIA, see what it is doing right now, trading at 155.25, still above the May 22nd high out there. So this would need to get back into the lower part of its range. That would be the ideal setup here. And today it would need to actually get below intraday, below 154.81. Anywhere below that, that would give you. Now you can see here the RSI in this case is not. It's up at the 63, 65 kind of level out here, 64.29. But we'll go ahead and cut it just a bit of slack out here. And that's what would be needed in order for this to have a key reversal session inside the Dow. But we'll go peek back in here at the 30-minute on the futures contract, see what it is that we've got coming in here right now. So there's the 30-minute. All that so far what has been accomplished is a 0.786 retracement off of the low that came in yesterday at 10:30 to the high that was put in here this morning at 12:30 in the evening at 1695.50 out here. So still has a little bit of work. It could easily move down and do a 100% move of a move. Go test that 10:30 area from yesterday morning. Yesterday morning, July 22nd, out at that 1685 level. So we'll continue to look in on this. In the meantime, let's go take a peek here at the currency market. Let's go see if we've got any confirmations out here, and let's look around the world. We'll start off with your favorite and my favorite currency pair out there, and that is the Euro-Japanese yen. And the Euro-Japanese yen that completed the 0.786 Gartley sell pattern. It did it. We had a nice bear sash candle yesterday, and right now the bulls are trying to take back that bear sash candle. And if it were to close right here, I would say currency-wise, we do not have a confirmation of a market that wants to move lower. Not just yet out there. Let's go peek in on the queen and the pound. Let's go see what those two currencies are doing compared to the U.S. dollar index. We'll update this chart. We showed that little rainbow convergence pattern out here. We identified that, and that is breaking away to the bullish side. So you've got these are the 8, 21, 50, and 200 exponential moving averages out here. They've now separated into, and this is a lagging indicator, into a bullish look to it. And with a bullish look, looks like the euro wants to get stronger and the U.S. dollar index would get weaker. The next move up on the euro-U.S. dollar would take you to the 132.7 mark out there. But perhaps because we don't really have an A to B equals CD up here, if you come into that level, hot meaning a wide-ranging bar, that says a move all the way back up to test the June 19th high out at 1.3415 out there. So you've got the little rainbow convergence that occurred back here right around the last week on Thursday, Tuesday, Wednesday, somewhere right around there when we identified that on the chart for you. Let's go take a look at the pound, see what it is doing. It had tested a support level of a hammer candle, and now all that it's really trying to do is to set up its next sell pattern out here. This one does have a to B equals CD up. That is completed as far as the as far as the 0.618 retracement, but I don't think that's the A to B equals CD. Let's go measure that. We'll come off of that low from July 9th up to the high on July 11th and all the way back down to the low here on July 15th. Yeah, so in order for this pattern to truly complete, it would need to move just a tad higher at about 1.543. It's been up as high as 1.528. I'm sorry, 1.528. 538. So just a bit higher to really complete that pattern. No bearish reversal signal here inside the pound. I think more likely the outcome here, because of the retracement only being a 50% retracement, it's more likely that we'll see the pound complete its next sell pattern at around 1.555 in the marketplace. Quick peek around the globe here. Let's go see what we've got going on inside the DAX. Excuse me while I grab a little sip of water out there. The DAX here has its sell pattern in place, a 0.786 Gartley sell pattern. Still no real bearish reversal candle. Just because the candle's red doesn't mean it's a bearish candle out here. So no real reversal signal just yet. If it were to close below today, and that would be about another 45 minutes of trading, I believe. If the DAX were to close below 8299, then I can make a bearish case that this pattern here has completed. But trading out right now at 8319, it has given us the bearish pattern. It has not given us the bearish reversal just yet. It has not given us the signal. If we take a look at the Nikkei out here, the Nikkei last night up nicely, but all that the Nikkei is doing, it's still got a Gartley sell pattern that is in place. This did give us the reversal signal. That was a key reversal, bearish engulfing session on July 19th out there as it made that high of 14,956 out there. And the following day, yesterday, was a sideways move. Today's move, last night's move, it's really eating into it. If this area fails, meaning it gets above 14,956, 15,187 will be the next move inside the Nikkei. Let's go see what they're doing over in the FTSE, celebrating, I believe, over in London with a new Prince baby out there. You've got looks like a little shooting star candle forming today as this is completing its 0.786 Gartley sell. The actual price projection was 66.92. The high so far 66.57. So it's at about a 40-point move away from that area, but you do get, if it were to close like this, you'd have a shooting star candle. If you saw some additional move lower tomorrow, that would be saying, okay, this is ready to begin its retracement out here. So just taking a look at these markets maybe coming into a sync, but the currency market so far, that euro, Japanese yen, not giving us a clear signal inside the marketplace. Let's go take a look here at the Shanghai. The Shanghai here, had that nice hammer candle all the way back here on the trading session of June 25th in the marketplace, and it has been moving higher ever since. It's really forming the A to B equals CD in here. It's got high volume. At least the high of July 11th will be tested. That's at 2190.61. But I would think more likely this would set up the next sell pattern, and the next sell pattern would look more like this, which would be a Gartley sell pattern right around the 2318 level, and that's what I believe that the Shanghai wants to do. Let's go peek in here real quickly at some of the ETFs inside the S&P 500. Let's go see what kind of weakness we have going on here. Let's start off by taking a look at the XLF, the financial sector. It's traded off of its session high here this morning. In fact, it's at its session low, 2081. It's got a 1.272 butterfly that it actually formed and created here this morning. Let me go ahead now and draw that pattern in. I drew that pattern in ahead of time to mark where this thing might likely move to. It says 1.33 now, but that qualifies as a 1.272 butterfly. So you will get, if this closes today, now this is important to be paying attention to because the trading session, the open of yesterday is 2074. You're at 2081. A close today below 2074, and quite frankly, a close below 2071. You'd have a key reversal session coming in at a 1.272 butterfly inside the financial sector of the S&P 500. Something to think about. 877-927-6648. I'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 14, S&P off 3. Let's continue looking under the covers of the S&P 500. We were first looking at the financial sector, taking a look at what's going on out there, because it has been it's been a sign of strength out here. We've got the energy sector up right now. The energy sector has gone back, and today is actually a test of the May 22nd high. Looks like 83.95 is the number. There were 19 million shares up there. Today, it's gotten up to 83.96. 2 million shares out there in the marketplace. No bearish reversal sign, but finally inside the energy sector, a test of that May 22nd high, and doing it on a lighter volume. Again, volume so far, 2 million shares, an hour and a half of trading. Chances are, with it being a Tuesday in the summer, that volume is not going to continue at this pace out here. So we could see a failure, which would be a close below 83.95 inside the energy sector with a test of that May 22nd swing point. Let's go see what the energy sector, I hope that's what I said, because I was also thinking technology sector, because that was the next one that I wanted to pull up there. Now we're going to take a look at the the technology sector here. Sorry for that little confusion. And that is trading down into the area where it had moved up or gapped up on July 10th, 8.8 million shares, but it's really 10 million shares that you are benchmarking against at July 11th level. First time down was with volume, 13 million shares. That was on July 19th. That said that it would be, price would be back down there in the technology sector. Well, in the first hour and a half of trading, volume so far, 1.4 million shares. For a market that's selling off a bit here right now, the technology sector, which is the largest weighting inside the S&P 500, is saying what? Yeah, it's saying not so fast out here, because there is no volume behind this move. I mean, if I take an hour and a half, 6 million shares or so, something like that, straight line. Somebody else would have to do the numbers for me, but that's not even enough pushing into the July 10th area. So volume would really have to pick up to the downside. The technology sector is saying, nah, it's not buying. It's not buying this at all, not at the moment. What other sector? Oh, let's take a look at the consumer staples sector. Let's go see what this is doing out here. That's the XLP, by the way, trading at 41.63 in the market. So let's go see what an area that has been a area of strength. Let's go see what it is doing. So far today, trading slightly lower, trading out at 41.62. It got back and it tested the May 22nd. Let's come to May 22nd here. That had 11 million shares. Got up into that with 8.3, so not enough to really bust up and bust into it, trading below it, but I'm not seeing exactly what I'd call a major sign of weakness here. Maybe if today it closed below 41.52, I could stitch together a candlestick and create a bearish engulfing candle, but that's what I'd be doing. I would be stitching it. So let's go back here. We're going to go take a look at the when we began the last session. I want to take a look at the 120-minute chart for the ES Mini, for the S&P futures out here. Where did I put that chart? Let's try this tab right here. There we go. No, that's the 30-minute. Give me a moment to do this here. My apology. There we go. So here's the 120-minute chart. We can see price still has not been able to pierce that low. Remember, what would have to happen is you'd need to see a break of that rising price channel, a close below it. Maybe it comes back up and tests it and then confirms that it no longer wants higher price. And I would say that the move off of the June 24th low may, in fact, be over. But not at the moment. We don't have that information. Stay tuned. Basil Chapman is up next. Following Basil, it is Tuesday. That means we've got the options hour. Following the options hour, we've got Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks. I look forward to seeing you in the morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.